Get ready for markets to drop. Actually, I'm not too sure. So a lot of you guys know that the market has been incredibly choppy, and yesterday we did a beautiful job as markets were in the green. We talked about a bull trap, and then markets quickly retraced and corrected themselves. The thing that is happening today is we're not really showing much progress on the downside, and that's kind of concerning if you are shorting. Now, let's talk about the fundamentals of what is causing this supposed sell-off and maybe why, again, there could be a possible solution that, again, can cause the market to recover because markets are eager for them to recover. So let's go ahead and just jump right into it. I'm going to sell a portion of my Tesla position right now. Let's see how much we are up on the day. So $5,200 so far on Tesla. We shorted on this rip down. I covered my short and then going long. Let me make this very clear. Please do not trade with too much of a dollar amount or too large of a position size during a very volatile market. Market direction can quickly change, and it's one tweet, literally one tweet can send the market haywire and completely against you. So again, the only people that freak out during this market chaos or market corrections are those that did not prepare. So be mindful of that and watch your position size. You shouldn't be afraid to take advantage of an opportunity, but you should respect the volatility by respecting it with an appropriate position size. The thing that I wanted to share with you guys is fundamentally what's going on. So yesterday, the US announced a hike in our tariffs to China of 104%. If you are subscribed to me here on YouTube, you saw the update that I had for you. And that's why the markets initially sold off, because supposedly we're in negotiations with them. Supposedly we're going to do a 90-day pause. Obviously, that was all fake news. And then once the 104% tariff was announced, markets began to tank. In response to the 104% tariff, China said they're not going to back down, and they slapped the US with an 84% tariff. Yet markets were still rising. So then you might be asking the question, well, Ricky, why are you then saying that you're not certain that the markets are going to continue to sell off? It's just the way that they're trading, right? If we look at QQQ and you look at the lows that we've made and the lack of progress, at least right now, there's not a lot of fear being injected into the market unless a curveball is added, that China comes out with something and how they retaliate that is not already factored in. It looks like, again, markets have been oversold enough that they're at least holding down here. And I want to remind you, the last time that the markets were holding, it didn't take much for the markets to try to recover. And all I'm saying that is in the short term. Long term, again, we still need to figure out the solution with what we're doing with all these tariffs in all these different countries. That's not going to solve itself within the day. I'm almost talking more for our day traders. Do not be surprised because of how the market is holding that if any positive news or any news that isn't that bad gets injected into the market, that markets quickly skyrocket for no reason, right? It's not for no reason, but it's just to show how eager the markets are for them to recover. You cannot be surprised. The markets are showing signs of a support. There's lack of progress on the downside. So the idea of taking profits and or the idea of shorting becomes a little bit riskier at these oversold levels because, again, we are lacking progress on the downside and there's so much recovery potential. So just like when buying at all-time highs, why are you buying at all-time highs when the profit potential doesn't outweigh the downside risk? That's kind of the same approach right now of why are we shorting so aggressively down here when there's lack of progress on the downside and we're already so oversold. It's just my 2 cents, right? At the end of the day, you're an adult. You can do whatever it is that you want. I don't want you to put yourself in a stressful position that you later end up regretting. Let me go ahead and sell another 100 shares here. It looks like we're showing slight signs of resistance. But the thing that I wanted to share with you guys is why the markets out of nowhere began to quickly push up. I don't know if you guys saw this, but during today's live trading session, our LPP team kind of enjoyed it because, again, it brought some volatility. But about 5 to 10 minutes after the market opened, we saw a quick spike up and we're like, what the heck? Let's find the news. Why is this happening, right? And it's one of my favorite parts about the live sessions is that we can work together to figure out what the catalyst is. Again, if you ever want to tune into the live sessions, second link in the description down below. But with that being said, what we ended up finding out is that Trump, I guess on Truth Social, which is Trump's social media application, said, be cool, everything is going to work out, the US will be bigger and better than ever before. Regardless if you agree or disagree, again, it's a tweet, it acts as a positive catalyst, and it shifted the market sentiment very quickly. Is it going to ultimately change the overall trajectory of the market? Of course not, right? It's a short-lived positive catalyst, just like when Roaring Kitty would send a tweet and then GME stock would pop up for no reason other than that tweet. It's something that just boosts sentiment for that period of time. But then again, if any on the fundamental side, any news gets factored in that was not already factored in, then markets will correct themselves. The thing that I wanted to share with you guys also is that China's central bank asked state-owned banks to also reduce the US dollar purchases. I don't know if you guys have been hearing this kind of overnight, but China, to retaliate with these tariffs that the US is putting on them, is also selling, I think, like over $50 billion worth of Treasury bills. And this is causing our 10-year, I wanted to share this with you guys because this is really what shows it and discloses kind of like the uncertainty. It says also under scrutiny was the sell-off of US Treasuries. The yields on the 10-year note and reference point of trillions of dollars in loans and securities rose to 4.47%. Pretty much because they're selling so much, it's boosting our overall interest rates of what it would actually be if we wanted to take out a mortgage right now, which is very uncommon because if you think back to kind of like the pandemic interest rates were incredibly low. The Federal Reserve began to cut interest rates. They made it even lower, right? Making it very affordable and very easy for people to borrow money because interest rates were so low. Now imagine this. Imagine we enter a recession and interest rates are incredibly high. That would be like a very unfortunate thing, right? And that's kind of the setup that we have. And I think that's why people began to panic overnight because it's something that we haven't seen in some time. But it's the way that China is kind of like retaliating, and it's by selling these treasury bills that is boosting the 10-year note. So just something to take into consideration. That is probably more concerning to me than these tariffs. These tariffs, it doesn't look like it right now, and I'm not going to sugarcoat it. It doesn't look like there is actual negotiation going between the US and China. They're just slapping each other with tariffs. It kind of feels like a slap competition of 104, 84, back. So as of right now, there is no progress. Supposedly, China has no intention of bending the knee to the US. And yeah, I mean, that's not the best sign. My biggest concern is when other factors begin to get added, kind of like what they did with the $50 billion of selling of treasury bills. Like that would directly impact, other areas aside from just the stock market. And that is concerning because if you think about it, the market's dropping, the stock market dropping, okay, that does impact some Americans, but really it's the wealthy people that get impacted the most. The people, the average American, again, in the big case, isn't heavily invested in the stock market, so they're not heavily impacted. But if they begin to affect with our interest rates, that is just another variable, another factor that hasn't really been taken into consideration, and that will impact the average American. And that to me is more concerning. So I'll make sure that, again, as stories continue to develop, that I keep you guys up to date here via YouTube. All I literally ask you to do is drop a thumbs up, subscribe to the channel. And if you have any questions or if you want to share things that you also have learned about the market, feel free to share that down in the comment section and maybe I can share it in our next video. So I hope to see you for tomorrow's live trading session. Like I've said, again, you can figure all of this out all on your own. But again, if you feel like you learn best by watching other people do and you want to watch me trade live and you want access to this, it's the second link in the description down below. We'd love to kick off the morning every morning right at market open with these live sessions, and we hope to see you there tomorrow. Second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.